Hey everyone, Couch Investor back to another video. For today I'm here down in that little cube. So yes, a bit of a different setup yet again. The microphone, hopefully it's good enough for this video. Don't worry, there's a new one coming in tomorrow, much better than the one I'm using today. This is a do-it-yourself type of setup. Now, as for the camera, it's going to be like this for another 2 weeks or so. After that, you're going to see my beautiful face on the full screen again, but doesn't really matter as long as what you get on the screen and what you hear is useful. Now, in today's video, we're going to talk about 3 growth stocks, mainly that I'm covering on this channel a lot, but those that I will be buying in the month of September. I do have to wait 2 days until I can buy the stock I'm covering on this channel, so that's why it's only in September. Now, most of them, well, all of them have already reported earnings, so we already know what has happened. I'm not going to go over everything again and again. I'm going to talk about the main points why I will be buying those stocks. Obviously, they are down between 20 to 30% right now, especially in the recent weeks when the market has not been very favorable. Hopefully, that will change pretty soon. Again, we've talked about in the shorts video, Labor Day. Before that, there's not much volume in the market. After that, we might see something else. There's also the CPI report in the middle of September, and then at the end of September, the Fed meeting. So all of that can move the market. Now, going back to this video, 3 growth stocks I will be buying in September. First one we're going to talk about is Mercado Libre. Now, before we go into that, if you want to support this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. Make sure to check all the other links in the pinned comment. Some of them might actually save you some money. So, Mercado Libre. Now, Mercado Libre is one of the, well, in my opinion, one of the best companies you can buy for the long term, especially at how they are performing in this extremely weird and difficult macro environment. Now, their last earnings report was nothing but spectacular, again, because of the current situation all around the world and especially also in South America. Now, the stock is down around 20% in the last month or so, but it was also up close to 60-65% since the lows back in May, June. So there is that. Now, as for the last quarter, this is just the major overview that I'm going to give you in this video. Obviously, I covered the full earnings report in another video. Now, yellow is Mercado Libre, basically the big marketplace that they're offering. Green is Envios, logistics. Mercado Pago is the blue one. Then Mercado Credito, which is this, let's say green bluish color. That's, well, credits. So obviously the yellow one, Mercado Libre, that grew quite nicely, 26% year over year on an FX neutral basis. All of those numbers are on FX neutral basis. Items sold up 12% year over year. GMV, that's up 26%, as I said before. TPV, total payment volume for Mercado Pago, was up 84% year over year. Managed network for Envios, that's up 7.9 percentage points to 91.1%. As for TPV of the marketplace, that grew 135% year over year to $21.2 billion. Credit portfolio is up, well, tremendously, 232% year over year. Now again, with credits, there is also a little bearish take you can have with that, as we discussed in the past. And then overall net revenue grew 57%, and income from operation, the margin there is 9.6%. Now, the main reason I'm adding to that is because, well, of that 20% pullback. And second of all, well, it was a great quarter. Companies executing perfectly. And I do feel that I can add a bit more to my position, even though it's already one of the, let's say it's in the top 6, let's say, of my portfolio right now. But again, they've shown me that they can execute no matter what happens. So that's the number 1 stock I will be adding in September. Number 2 is, you might have guessed, my number 2 holding, and that's Square or Block, whatever you want to call it. That one is down 23% in last month. And so again, a quick overview of what they reported and again, the reasoning behind why I will be buying more shares. Now, the title of the video when the earnings came out was why I'm buying more shares of Square. Obviously, now it's down another 23%, so I'll be adding a little bit more as well, because again, looking at those numbers, I really don't see much that is negative here, especially if you look at the 3-year CAGR. Everything here is doing exactly what it should. And I will repeat myself again. Square, the cash app side of the business, has obviously gained tremendous momentum throughout the pandemic. The Square seller side was hit during the pandemic, but now gains tremendously because of the reopening of the economy. So both of them are balancing it out. That doesn't mean that Cash App is stopping to grow when the pandemic is over. No, on the contrary, it continues to grow as well. You can see on the 3-year CAGR, this quarter, it's up 88%. It's a tremendous number. Now, yes, obviously net income here is negative. We've talked about all the effects of why this is negative, why this was super positive, etc. Yes, this will have to change in the future, but they've shown us that they can improve the financial metrics quite significantly. And now with the, well, let's say high inflation macroeconomic environment that is really not stable, I do believe that a company like Block, with the services that they offer, Square, Cash App, Afterpay, Square Capital, you name it, I think they can help the majority of people to manage their money a bit better, maybe spend more responsibly. So I think they can, again, take advantage of the current situation by offering one of their products because, well, it would benefit, again, the guy that is selling something, the restaurants, hotels, individuals, you name it. And last one shouldn't really come as a surprise. What should come as a surprise is the fact that SoFi stock is down 28% this last month. Yes, even after they reported a great quarter, even after we had that announcement from the Biden administration, again, the extension is going to stop. When you're talking about the student loan repayment, that's going to stop at the end of 2022. SoFi's guidance already take that into consideration. They do not expect it, they did not expect it to end before 2023. That means that in 2023, that turns into a tailwind. Now, the stock right now is taking a hit left, right, and center again and again. But as we've seen in the past quarter, they can navigate perfectly, doesn't matter. There is another student loan repayment stop, freeze, whatever. They are doing quite well because the other side of the business is growing tremendously. Members are up 69% year over year. Products are up 79% year over year. Galileo accounts are up 48% year over year. And here, as you can see, lending products on the left, financial services on the right. Financial services has outgrown lending products by quite a lot. And so I do think that picking up SoFi under $6 might pay off quite nicely in the future, especially you don't even have to look 5 years, 10 years from now, especially in 2023 when they'll get that benefit yet again, something that they have lacked since actually COVID started. So overall, those are the 3 companies I'm looking at right now to add to my portfolio: SoFi, Square, and Mercado Libre. And obviously, I would like to hear your thoughts on any companies that you might be adding to your portfolio soon enough. Let me know down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I'll see you all in the next one. Bye bye.